Welcome to the Justin Johnston Show. I'm Justin Johnston, commercial real estate agent. I've been selling and leasing commercial properties in Utah, Salt Lake, Utah counties for the last 28 years. And it doesn't seem like that long, but now, I am aged and that's where I'm at. And we have a special guest today, Dylan Nelson. Dylan does commercial finance, commercial lending, and actually a lot of the key. Without lending in this business, from the business side, everything else, Nelson Funding is the organization that he's with. He's given presentations to our brokerage at Berkshire Hathaway. He recently did, and I'm like, hey, you got to come in and do this show with me. I've done brokerage, right? And I've had relationships of people doing it from banks and different lenders and things like that. And, as I was thinking about this week, I was thinking, without the lending side of it and the creativity, it's what makes everything happen in this business, right? Why is it slowed down? Not because they're not interested out there, right? Interest rates came up, and now I'm not letting you introduce yourself as well, but interest rates have come up, and it's like, oh my gosh, it's like just hit the skids, right?
Yeah.
And it's because people got to the smart guys like you that have to say, okay, what's our risk in doing that? But
from my side, deals don't make sense, and that's the key problem. Deals don't make sense. They don't cash flow. Ultimately, there needs to be a cost basis reset, and who's going to take the hit on that? There's not any volunteers lining up to take a cost basis reset, and so thanks for having me, Dylan Nelson, Nelson Funding.
Yeah.
Do commercial lending. We operate as a broker and correspondent lender. And so just quick background on my group.
Yeah.
Basically, we have three main kind of programs we really target. One is bridge lending. So we do a lot of value add or quick close scenarios. One of my favorite examples, we did a luxury portfolio of homes. Utah, Hawaii, really high-end homes. 3-day closing, insane. A lot of work, about $23.65 million deal. Good stuff. So we love the bridge deals. If you have a bridge deal, would love more than 3 days. But if you get in a jam, always give me a call. We do a lot of construction lending. So right now, a lot of multifamily, single-family development deals, still very active.
Wow.
Just still given sales velocity has slowed way down. A lot of retail, a lot of hospitality. Office is next to impossible to get done. It's kind of the forbidden, the forbidden fruit. No one wants to touch office. It's very difficult given the macro environment. And then we also do a lot of permanent financing. Given the rates, it's not as active as bridge and construction. It's hard to make deals cash flow. Lenders are being very selective on deals they want to work on. That being said, deals are still getting done. You have to be very creative. If you don't have a good deal, you have to be very creative to get a deal done. And so it's not an easy world. I'm sure you're seeing that sales slow down. Not a lot of activity happening.
Yeah, there seems to be desire to make some things, right? I mean, people kind of pushing it, and it's been pretty easy to do some deals, with 0% interest. So to speak. We talk about that. There's always a spread on that. So a lot of the deals, it's been really nice to be involved in land deals, right? They're very lucrative. The commissions are large. We put some deals together, and those are. We were working on a couple and midstream, and they're like, hey, as things started to come up, people got very hesitant. And I've got some friends in the business.
We still like land, so if those are around, let's take a look at them, see what we can do.
There is actually a deal. As you were just saying that, I thought, I just yesterday I was talking, I know that there's a perception on this one that they got to bring some fill material in and raise that up, but it's only under the buildings. Now they're larger industrial type buildings, but so it's not a no cost, but it's about half.
Is there an environmental risk?
What is it?
Is there an environmental risk?
So it's actually in a part that they had the water, the flood. So it was a flood issue, and they had there was a dike that had has protected. It's never been. They've not had flooding in this area since they've had it, but they're kind of going back and saying, "Hey, let's reevaluate this. We're letting buildings be built." So
Is that here in Utah, or
Yeah.
is that located?
Utah,
Nice.
yeah.
Tell me about the deal. Let's do it. Let's figure out a deal really fast.
You know what? By the time I release, we'll have to talk after on
Okay.
that. But it is, there is a pretty good opportunity, and I think some bridge thing that could happen. Anyway, we'll talk about that. But and again, I said that as if I was the one that was, yeah, we put some deals together. I've been doing it long enough that I know they passed the sniff test, and okay, who's got powder in their keg, right? I mean, isn't that what the term, who can do this, who can put it together? But at the end of the day, that's what makes it happen. I've had some developers that were just a little too small, and they didn't have those relationships, and you get down the road, and it's like, okay, dang it, we shouldn't have gone, a different direction on that, right? Because it's everything, right? If you don't have that structure and component, which I'm always surprised that there's some guys that are really strong. They've been developers for a long time. They could do it, but maybe their banking relationship, it's just not the box that they're checking now, right? So that's what I love about your...
Yeah, those boxes change over time.
Yeah,
Maybe
they
you bank
change.
at the same bank for years,
Yeah.
but management shifts, their risk appetite shifts, given the market and the volatility, different banks going under, it creates a shift in the market. And so you could bank with the same bank for 100 years, and then, hey, sorry, Justin, no more land deals. Now what? Call me.
Yeah, well, and I think, and I hate to say it, I think this is not blowing smoke,
Yeah.
your way. There's the bank people, and I found they've had those meetings. It's like, hey, we're not loaning on office, or whatever it is. We're not doing commercial. Like sometimes they'll back off, and you get that feedback from them, but from within, they go to committee every week. It's a very structured process, that whole loan committee and things like that, whereas you get in your realm, right? And you guys are looking at it, I think in my perception is that you're looking at it from a totally different angle because you have these different capital partners that are looking at what they want and what they will do. And office, I'll just say that now. I mean, at first I was thinking, okay, it's going to settle, and then it's going, and then it kind of, people are going to go back to work, there, and then it wasn't happening, and there's enough shift that's taken place there. I think it, everything, and I'm a voracious reader on anything in this industry, but that one, whenever I see any, article, any angle, I'll read anybody's angle on it because I want to hear what they're saying. But there was a big study that was released that I don't know, it was a couple of universities in New York. They were really analyzing the New York, Manhattan, that market, right, and all the things that they've had.
It's a tough
and they
market.
said, hey, here's what so they came out with it. It was about a year ago, and they said this isn't complete, but we're pushed to get this out. I mean, that's kind of how they released it. So I think it was just like last month that they finalized that, and they're saying, hey, okay, this is for New York, but we had enough input from all around the country now, and we had more, right, people that were contacting and stuff. This is across the board. I mean, we're going to see a valuation shift significantly, and that makes sense to me.
So I like that you bring that up. I just got back from a conference. It's probably been a couple of weeks, but back in Manhattan, and a lot of larger commercial lenders, kind of the big boys, right? And part of the conference, a lot of the conference was discussing office, specifically in New York City, and then in other major markets as well. And what are people seeing? What's happening? The problem is a lot of offices are underwater, meaning the tenants are not renewing. They've given cancellation notices. The offices that still have tenants in place, a lot of them have been notified that, hey, we're going to be scaling down to a smaller size. And then underwriters, when they look at an office deal, they're looking at the warm body test. If we were to show up to this office on any given day, what % people are actually coming into the office? Or is it just a zombie building? Is it just, hey, you got a bunch of tenants, but no one's in this building. What's truly taking place? So the consensus was a lot of these loans, the loan basis is way over the value of the building on a square foot basis, about a 4 times over.
Really? So okay, explain what that means.
So meaning the loan basis, so they made a loan for $10 million, that building's really worth 2.5, given the true cash flow of the building. And so you have a lot of lenders who are looking at their balance sheet and saying, oh shit, or oh shoot, I have all these office deals, tenants are disappearing, they're going to be due, their maturity date's coming up. What do we do? How do you refinance those deals? You don't. You have to sell. So you're gonna have to sell at a new basis, and something needs to happen there. And so a big topic was, well, can you convert an office to multifamily to industrial? This was. I'm not an engineer. I'm not a builder. But it turns out a lot of the infrastructure for a building, for a commercial building, is way different for multifamily. Think of the utilities, the water lines. You know, you go from having 1 bathroom on a floor to 20.
Yeah. There's
a huge number there to make those improvements. And so there's actually a panel of engineers and developers who are like, hey, we're developing a model to know if your retrofit is going to be worthwhile or not. Mm-hmm. But end of day, the consensus was, hey, there's a lot of these deals that are quote unquote underwater, and the leasing brokers that know, hey, this developer, this owner, they're gonna have a hard time refinancing this deal. It may trade hands. It may have to, something's gonna take place there. So do I want to place a tenant in that building?
Yeah.
Probably not. You know, and so it's a mess.
Yeah, it's a mess.
It's a mess.
And we've not seen, I don't do a lot of office, but with the office the real estate company that I started with back in the day, everybody in there did office. It was, the owner was just like, hey, we lease and sell office buildings here. And so I did a fair enough amount of that. And so I understand it. I feel, good doing pretty much any, office deal from that standpoint. I've done enough of that. And, but looking at it now, I'm like, wow, we've built a lot of office and some of the articles that I've read is there's kind of a year, they're saying about 1990, where there's in some of these New York, older San Francisco, some of these areas that there's a lot of buildings down there.
A lot of vacant
very
buildings.
Vacant, and they don't transition. They're Class A buildings, but they don't have all the glass in the windows, so they're hard to, they were just built for that era and time of what was, and everybody was coming in from the clerks to across the board. Everybody was in there doing their thing, and it's shifted. I mean, it works too, right? So it's not like they're just copping. I mean, there's people that can take calls at home. If you're, you can sit there, you can do it, and sometimes it could even be more efficient. I mean, if you're trying, I know that it's not the best scenario. Like the things that I've heard, it's really hard to build a culture within a company, because not every company's the same, right? Different real estate companies. I know that I offer services. People call me, and I'm like, okay, you know what? I'll refer guys at other companies because they're friends of mine. I know they're going to do a good job for them, so I don't lead them astray. It's just not what I'm offering. I don't chase everything at this point, right? I know what I'm good at from that standpoint. So, hey, I mean, well, that's how it is at all these other companies, right? I mean, it's not just, hey, I work for a tech company, and so they're all the same. Obviously, there's going to be some changes too, Twitter and different mindset, I think, altogether of how they are going to navigate this, because they're very skilled people in what they do, some of these industries. And it's no different when you start getting the financing, right? All the finance sector, with that whole, the things that you offer right there, even though you quickly went through that, I mean, those are deals that take a tremendous amount of understanding and knowledge.
They're not easy.
Not easy.
They're not easy.
And so so it's very interesting. So I've looked at the retro, and too, there's a couple companies I've heard about, where they've actually, hey, here's the depth that it's got to be, and they still may not have capacity when you start talking sewer, conversion of power, you know, per floor or per unit, and how does it work that way? It's more complicated, like you say, than the initial, like, hey, we'll just convert it to, you know, and you look, and sometimes when I see the pictures, you know, when they're showing Manhattan, and I'm like, oh, I can see that. It almost looks like it could be an office
That
building,
could be
or
a cool
high rise, or
Yeah.
you know, and it's like, nah, it's not the same. They were built differently from when it started, right? So there's some that work, and that's anyway. I was watching one that was like the depths of them, bay depths, you know, column spacing, some things like that are just key. But nobody, there's not. You know,
Yeah.
the guy just kept saying in the interview, it was like, you know what? But it's per building. Every building. He said all these
Every
things I just
building is
said.
different.
They're all different. So he's like, I don't know. He's like, there's some of these buildings that really are not 40-story. They're just outdated,
Yeah.
right? On some prime real estate. But I mean, what's the loan on that? You know what I mean? What is the
Their
value of that
basis
building?
is too high. Their loan payoff is too high. If you take their loan payoff plus the cost to do the renovation remodel to multifamily, your ARV, your value at completion, there's not enough margin there to make it worthwhile on a lot of deals. That's not saying every deal is a bad deal. There's still some winners out there.
Yeah.
But you have to know what you're doing. It can't be your first deal walking in, hey, I found a vacant office building. I'm going to go spend $5 million and make it into a $50 million multifamily deal. It's not going to work. And I guess the bigger issue right now is even across the board, I think there's still some CMBS activity on larger office deals. But if you're looking for a bank, a credit union, a lot of the private lenders, even those guys are coming back and saying no office. This is anecdotally, but an anecdote. But we have two deals we've been working on. One's in St. George, beautiful Class A office construction deal. It's about a $29 million loan ask. So about probably like $40 million total project cost. And when we first started the deal, there was a lot of interest from the capital markets. A lot of players were like, "Hey, fantastic." We've had a lot of deals rescinded, where as committees kind of update on what's happening in the market, they just come back and say, "Hey, hey, sorry guys, we never do this, but no more office deals. This deal's, we're pulling back our offer. It's rescinded." And we have a deal in Phoenix where they're taking a vacant office, doing a light remodel, and then bringing in new tenants. And the developer knows what he's doing. He's done like 10 plus similar deals very well. He has a lot of horsepower. His balance sheet looks great. Good cash on hand. But even then, the leverage attainable is, we're at 50% leverage point on a deal like that, which is it's a tough sell. Make a lot of clients really mad. Hey, I know you're used to 70, 75, 80% leverage. How's 50?
No, that's and then does it make sense? I mean, that really does press it, right?
Tell
if
me
you go
what
down
your
to that,
how do your LPs feel about bringing in more cash, lowering down your return? That's a fun conversation to have. Let me know how it goes, right? Like it's tough.
And I think we really are. We're not at the beginning of that, right? Because it started, and then but it's kind of come down to where this is now the consensus. I think there's been enough stuff that's come back to said, and we don't want to see the pro forma of what it's going to look like.
I need actuals.
Who's coming into work? Is it vacant? Is it vacant half the time? So where you gave the presentation in American Fork office. Mm-hmm. Fidelity's on the first 2 floors. So as soon as the pandemic hit and they were making the decisions, ours was like, hey, we put the banner up, wear a mask, sanitize your hands, social distance. It was just the thing that at every entry coming in, we talked about it. We held, we didn't know what was going to happen at the time, right? Well, Fidelity, based out of whatever, headquarters in New York, whatever, they were making decisions company wide, and it was well over a year that there was not a car in that parking lot, and I thought, this is not going to. I mean, even then, I was like, "There's no way that this is going to come back because every one of these people are going to go back." So I was in there the other day, it was I don't know, probably the week just before you came in. There's a day during the week that everybody's supposed to come in. And so we pulled in the parking lot and used to be able to get any place you want, wherever you want to park. Even still, I mean, because they've got a very limited staff that's in there now. So they did start coming back, but it was the day that everybody was supposed to be in. And I'm like, hey, so is everybody coming back? And they pointed that out. You know what? This is the one day a week that we all come in. We're supposed to, I think they said that like some of the people had to be in there at least 2 or 3 days. Anyway, they gave me this little quick rundown, right? And it was, this is the one day we do come in. It's important. We have different meeting agendas for all these other things during this one day of the week. If you do miss it, you're going to miss out on, you don't get the update because you're not going the next day with everybody there. It was kind of an interesting. I think I was holding them there in the elevator a little bit longer. I was like, really? So how do you do this? And, but
a little elevator.
Yeah, I
wanted. I
wanted
need to know. I'm taking notes. What's happening here? It's the hybrid work schedule, right? You get 1 day in office, 2 days in office.
And what I realized, they hadn't figured it out yet.
Yeah.
Right? They haven't figured it out. I have a son-in-law that works at Domo, and he was part of the sales team. They want the salesman in there. They want him to where they can see they're interacting, how many calls they're making, and
the competition, right? The competitive spirit of, oh, hey, John's doing 5 deals right now. What am I doing? And
yeah, it's the competition. Exactly. It's that sales floor mentality of how do we keep guys going, and how do you gauge against the next guy, right? I mean, you're not. I don't know. I mean, it's just it's been all over the place. So he was on the actual sales, and during the pandemic, he moved into this position of where he reports the sales to management. So they had one liaison even back there at the company that did that. He got that job, and he likes it a lot better. It's not based on total commissions as much as it was before, but it's just a job shift. But he's saying, I mean, it's a hard sell to get some of the people in, and they did say, we were talking, I think, earlier about that culture, and it was, he said, everybody, when he went to work there at Domo, there was a culture. And he said he could see that over time, as the pandemic went on longer, somebody left here and went to another company, and they started getting new people in from these, and they just ran things completely different. Like, are you kidding me? You guys reported your numbers this way, right? It's like, yeah, that's how we do it. That's how it was at the other company. Like, we never do that. They said that, it's all the different ways, right? I mean, it's not just culture, but it's modality of everything that you're doing, right? And so they wanted to come back. But at the end of the day, there is a lot of people that don't have to come in. It's just an interesting thing. And I don't know for sure if, I had my license when the .com thing happened, and I remember going in whole floors of, they didn't have the employees. They did it as, hey, we've got this whole floor, so a different thing altogether, and some of them you go in, they were legit companies, right? They were actually, everybody was in there. It was like, this is madhouse, in here. And interesting, right? The difference there. But
I'm a big fan of the work from home. So little backstory. Yeah. So after college, I was recruited. So I worked at a family office for a while. Fantastic job. I worked at a division that was like a wealth management company. Loved it. I followed my boss to sell 401k plans. Not for me. Very, very dry, very boring. I don't know how people do that, but not for me. And then I got recruited to go work at a very large investment bank that's in Salt Lake City downtown. We won't say names, but I had to be in office. I had to be in my desk essentially every morning. Like 6:30 was the latest. Like it was brutal. You had to be there very early, and you're working very late nights. But like for me, I guess there was a lot of downtime, or I was getting yelled at a lot because the team I was on, we were supporting a sales staff, and sometimes we were recording transactions like too slow. There's a lot of paperwork to be filled out. Things were missed. And so I'm not a guy who just I like to improve and make the process better. But going on a tangent, the being in office sucked. You got to travel 30 minutes, 40 minutes, maybe an hour, depending on traffic, one way, another hour back. It's exhausting. Yeah. My team now, we all work remotely. We have a shared office space if we need to do an office training. But working remotely, I love it. But I'd be curious if I went and asked my team, hey, what's our culture? I hope they would come back and say, hey, we do what we say we're going to do. We do right by our clients, and we work hard. So I'm going to go follow up with my team and send them a little questionnaire, like, hey, how would you describe our culture? Is it what are we good at? What are we bad at? And I'd be curious to see their
Well,
feedback.
okay, so let me interject there. So it sounds like, and I could be, you've worked at a couple of these other places. It sounds like the team is more seasoned.
Yeah.
Guys that have been around, they understand all of it. So you're going to get different rainmakers in different ways that they do things. But I think knowing what that culture is a little bit does help, right? And especially if you're relying or there's things you're saying. But I think at the end of the day, you do end up you're that other job you had was maybe that in between, right? It was where they are just trashing people, and I've never really fully understood that type of numbers. We got to get it out. Like they're blaming just everybody, and it's like be there at 6:30 in the morning. The commute is a crazy thing. It's one of the more difficult things because I like to be on time.
But it's so cool to be downtown,
Isn't that an interesting thing? Like that's because half the commercial brokerages are in downtown Salt Lake, right? And there was a little point where they actually moved up, kind of in south, suburban east side, Cottonwood High, and then they all moved back down. They might have a little branch office somewhere. I'm like, why did they go down there? Because it's not like a law firm and there's the courthouse is there and they've got to do this stuff.
Right, yeah.
The lawyers do it too, even though they don't necessarily have to do it nowadays. Everything's recorded electronically and all these other things that have changed, but there's that idea, right, of what it is. And so it's really interesting.
They try to, in my mind, they try to hype it up and make it seem, wow, you're downtown, you got to fight traffic both ways, you got to pay for parking. Downtown is a little bit more expensive, so have fun on lunch break. Or, hey, I could work from home, save hours on my commute, save on gas money. I have all the necessities I need right here. I have a great home setup. I think that's the caveat. If you have space that you can work in at home, that's quiet, and you have your ability to perform, it's great. But a lot of people don't have that luxury. And I think that's, the beauty of the office is you have a place to get separated from whatever is going on at home. Maybe it's a distraction or whatever may be occurring. And so that's where I think there's
so at this point, and there's a couple things dynamically about lifestyle, right? What you can do and the lifestyle that you have as well. I think when I look at it, I try to take a couple steps back, right? And say, because everybody's like the pandemic and we weren't going in the office. The trend had kind of started before then, and it had started for lots of different reasons. So I never worked from home, right? Now that was a combination when I was younger because everybody went to the office, kind of like that other place you were at, the investment company or whatever, they were doing there. But they had everybody went to the office. They had early morning meetings to make sure that everybody was there, and we just did it. And there were things like copy machines that we would print these packages out and mail them first class overnight, and it's like, click. I just sent you the whole thing. In fact, I gave you the Dropbox, so we've got engineering. We've got, all the due diligence of anything that's been done, wetlands, everything's there, right?
It's one of my biggest pet peeves. So when we're doing a deal and we have like a standard needs list and then maybe we need a few additional items, all I need is an email. Send me the attachments, separate items. There's still kind of that old school mentality of, hey, what's your address? I'm going to mail you a packet. I'm going to give you physical copies. And I'm like, whoa. Digital format only. PDF is great. Excel is great. And so, I'm like, I can't read it and then transcribe it. Like,
you're creating work for me. I'm going to have to scan these in or something,
you're
right?
Creating a ton of work. There's a premium for physical copies. That's
absolutely.
a lot of work.
It's crazy. And so here's the second thing that came out: the video, right?
Yeah.
Now we're doing video. It's not live, and we're not bringing other people in on this, right now. But the capability is there. I see other podcasts do it. They're getting somebody coming in from New York, or maybe we could have even done it from my home to your home today, right? It's been easier for us to do it this way, maybe because I'm technically
Well, you have a great setup.
It
so
works
why
well here.
why not use it?
So and it's enjoy. We can be quiet. We don't have the interruptions. It
Yeah.
is what it is from that standpoint. But doing land deals, I mean, it was always a huge task to get the developer, because the developer and the engineer needed to be there. There's some meetings that you can't go any further. You're at that DRC, part with the city, and you got the planner, and the planner's got an idea, but of course the developer's trying to do a different thing, right? Because he sees the opportunity that's there, and maybe it's there, maybe it's not, but what do we need, right? So it was a challenge to get everybody there on time, because the meeting had to start. And that was the first boom, because it was a Zoom meeting. It was the first one. We had a couple little office ones, and okay, we got to do it Zoom. I mean, that was the way, right? And I coordinated all that stuff with the guy. There was a guy at the city, Pleasant Grove City. Boom, comes up, and I'm sweating, right? Because I'm like that everybody's going to be there. I don't know why. It was like,
You have your audience,
and all of a sudden they come,
yeah.
boop, 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 within a little bit, and I just realized everybody's sitting either at their desk or at home because the pandemic was going on. It was time. What did they do? They're like, oh, they maybe were eating a sandwich at the bar. It's like, oh, it's 11:30. I got to get in to this meeting, right? And that's what they did. They didn't have to jump in their car. They weren't trying to get out because there was a meeting there, and they all had to commute to the city office again. We pull it up, and about 25 minutes later, we literally had answered every question. And of course, the engineers were on the line, right? The video's there, so they kind of pinned him down, and it wasn't like he wasn't trying to evade. It was like, well, what about this? And then somebody else, what about the sidewalks? They got to be, right? I mean, all the
Yeah.
little things that
Yep,
just come
all
out
the-
in these meetings that, I don't know, 30 minutes later, it was done. And
So much easier.
and I was like, oh my gosh, okay, nobody had to jump in their car to do anything. That's a big thing, right? I mean, to leave, like I said, I tried to be early, right? Because I don't want to hold something up, and I respect other people's time as best I could. You came on time. It was a little early, right? Today, it worked, right? And,
Yep, it's perfect.
And so if you do that and you show up, but I realize that people do get caught in traffic, and there are, maybe they just came from a huge, issue or problem that they could have stepped out of their conference room into the office to have this call, and it's not the same commitment, and that drive time's a waste, unless you're listening to audiobooks or can make those calls as you're going. And, over time, I don't make as many calls because I don't want to wreck, right? I mean,
Yeah,
I've
there's a lot of distractions. I don't think anyone really enjoys driving in traffic.
yeah.
So it's 1,000 times easier just to walk into your office, shut the door. I'm guilty of this. I'll wear like a dress shirt up on top, and then I'm wearing like sweats below, or I'm in my boxers, just like top half only, please.
Yeah, I love that when they show like the news anchors that stand up and do
Yeah.
that. I had a couple of those too, where I literally had the tie,
Yeah.
and jacket, because
Yeah,
I was like
yeah,
going,
yeah.
and I'm
Gotta
coming
look
out and I've
nice.
got my underwear, right?
Yeah,
And my
yeah.
wife's like, "What the hell are you doing, Justin?" It's
What's
like-
going on
it's
in
like,
there?
And I'm like,
I'm in a meeting.
Yeah. It's like, and it's actually relaxed a lot of those standards. I mean, people don't
Yeah.
wear the
Oh,
suit
yeah.
and tie as much. It's like, you know
No.
what? Let's get smart people that know what they're doing. There's a professional. Professional is a lot of different things, right? I mean, in lots of different ways, the way you treat and handle business altogether. And it wouldn't be super professional to send a packet like this over, right? There's better ways that have evolved. And I think that started, as soon as Adobe had their PDF and the others, it was like, that process was happening because you could actually, I got that, I can kick out as many, I can print. It prints pretty fast. I can't make a copy on this one, but I scan with my phone. So
Yeah,
all
you
these things
just-
that you used to need in an office, it's like, I scan that in with my phone. I've got the Adobe app that scans it in. There's lots of other ones. I've seen some are great. I just use the Adobe because that's what right?
It's easy.
It's easy.
Yeah,
it's
it's so
what I
easy.
understand. It converts it the way, and it's like, wow, that from my iPhone, I just scanned as fast. Not just throw the whole pack in and did it, but nobody's asking for that stuff, right? The same way I just got this report back, or I'm taking a picture of the thing, and I'm going to send it to you. So all those things, they've started for a while, but now they're more widely accepted. Younger guys are like, why are you old guys doing it this way?
I don't need a packet. Just send me the attachments. I can look at it. It's very easy. Justin, just side note.
Yes.
What you should do, Sloan at Adobe, You need to sponsor Justin. This is a lot of free visibility.
I know
for you,
Domo
buddy.
and Adobe.
Yeah, Domo,
I don't have to
Adobe.
No, there's truth there. Hey, and you know what? And that is because they won me already, right?
Yeah,
So,
yeah.
so they got me, and there's a lot of other people. So there's a lot of a lot of that. So let me shift. Let's shift this a little bit altogether. One thing that changed from when you first got in the business, you had these different jobs. I think we've talked a little bit about that. Is there something else? Obviously, interest rates have been historically low. So when I first got in the business, I got my license in '95, and they just kind of fixed a lot of the problems with the savings and loan debacle, with that.
Yeah.
And so everybody would be talking about it. All the old guys were always talking about it. We went into this, they were literally selling buildings that, out of receivership, whatever. I mean, all these issues that were really kind of interesting, but there were some killer deals that people had made. I mean, obviously there was some major wealth from some of these family office groups and people that I saw. I knew what they had acquired and things like that. Anyway, but I think I remember 9%, if you had a deal that was under 9%, there was something either you knew or you were like, you had a great contact, right? 9% was the kind of the threshold, right? And it was cap rates were like a 10 cap, 11 cap, but that was like, it had to be good,
Had to be a good deal.
Had to be a good deal. And so, it was a shift, right? And then the cap rates came down. I used to follow them because I realized, oh my gosh, there is a spread between what the 10-year treasury, because I could pull it up and see it anywhere. That's the only thing I'd look for, right? If I'm watching a CNBC or something, I'm just looking until they gave the 10-year treasury. It's like, it wasn't moving that much anyway. But there was a spread between the cap rate and the 10-year treasury, and it wasn't that far, a couple points,
Yeah.
I think was, and maybe I didn't understand prime and all that at the time, all the ins and outs. But then it got down to where you've compressed this. I mean, cap rates can't keep following.
They can't keep going down.
And they were like almost an asinine rate. It's like, I don't know. So in my career, I saw that it was here. My dad financed his house at 18%. It was like, he did it we finished construction at the worst, we didn't get sod or trees or anything. It was like, we just got the loan to take it out, right? I remember we were all over there working, to try to save costs at every level, right? And he financed it there. And then within a couple of years, he refinanced it and did it a couple other times from there. What has changed from when you first got in this business, and then what do you see changes? Where do you see that? And lifestyle, the rest of the stuff. Throw anything you want in there, because that's really what this is really about. It's about our life, and because I'm assuming we have significant others, family, people that are important to us, and I think we're consumed with our phones and things like that. Sometimes it's a great blessing, right? I mean, I was able to go to the dance recital because, normally I would have had to wait to have that phone call, but now we're communicating in a different way. It's like, I was able to go, I saw the thing come in. Yeah, I had to check out mentally for a little bit, which I don't love doing either. But anyway, you know where we're going. Things that have changed big time that you see, where do you see it going from there? And obviously, any other predictions or thoughts you have?
Yeah, so I'll answer from the reverse order.
Okay,
so
perfect.
I think we're going to see a lot of really, really good opportunity coming up in the market. I think we will continue to see the market correct, and that creates opportunity. It creates a good spot to buy in, where hopefully we'll see deals make sense. So I started Nelson Funding back in 2019. My background is more investment management. Had some family office experience. I knew a lot of the players in that field, which was a great kind of propeller to where I am now. And so I would say the number one thing that's changed is the ability to get a deal done. When I first started, I don't want to say it was easy, but pretty much any deal we could underwrite, have it make sense, and get it done. And the market has tightened dramatically with COVID. When that first happened, there's a lot of uncertainty. A lot of people stopped lending or paused lending because they didn't know what was going to happen. And then we got a huge rush of money into the market. Everyone is chasing yield, wanting to put out money. and it created where we are now, right? If you look at cap rates, they've shrunk. Do you know the average cap rate in Utah or Salt Lake? Or I think we're at like a 4 on multifamily.
Yeah, yeah.
And if
5, 6 industrial.
Yeah.
I mean, you know.
And so how do you at a 4 cap? How does that cash flow in today's market? You got to bring in more
money,
cash.
right?
Typically, the golden standard is typically 75 LTV, LTC, maybe 80 depending on the asset class.
Yeah.
And developers are used to 75, 25, and that 25 on their side. Typically, they have some sort of limited partner, someone who's bringing in some of the equity on their side, and they're sharing the return, and they're modeling, a 12% IRR or something to that nature.
Yeah,
But the issue is, if you're selling at a 4 cap, rates are if you walked in today, you could get an agency deal, if you're lucky, 5 3/4, bank deal 6.5, 7, 8, even up to the 10s, depending on the deal type. And you can't make a deal have sufficient debt service coverage ratio or a debt yield requirement at 75% leverage and those rates. So what do? You bring in more cash. So now you're looking at 55, 60% leverage if you're lucky. But what happens to your return? It goes way down. And so I think there's a lot of money on the sidelines waiting for opportunity. And I think we will continue to see sales slow down. And unless the deal's creative, it doesn't make sense.
Where's that money come? I mean, obviously there's less deals, right?
Yeah.
Because people are saying, I don't have the cash, or their partners, limited partners, or whatever, they're saying, nah, we don't want to do that, right? So maybe there's some of the money that's sitting on the side too, potentially, or who knows, right? I mean, where have people been pulling that extra cash from that you've seen on deals you've done? I mean, to make, is there a market out there? I mean, you're saying bridge, but bridge, I mean, maybe help get a deal done versus, because they're taking long-term, right?
So,
I mean, that's...
Yeah, so the thought process is if you're doing a bridge deal, whether it's construction or value add, there's some kind of premium being created, right? You're going at a certain value, and then you're creating additional value by building units or doing a remodel or whatever, and then at permanent financing, you're going to do a cash out refinance, pull your money off the table, do your distributions to your LPs, and roll on to the next deal. The problem is there's not enough value creation to justify the deal. It doesn't pencil. And so the deals that are getting done are at lower leverage points, and depending on the client, if they're a bigger developer, it's still some institutional money, and they're requiring the GP, typically the builder, to bring in a higher percentage of the equity required. The smaller developers, typically that's friends and family money coming into deals right now. Back when things were, I don't want to say easier, maybe the credit was more accessible or loose.
Yeah.
It was fairly easy to go get pref equity and go up to 90% of the total project cost. Developer brings in 10%. You're paying 12% on pref, 14% now. And so times are changing. Everyone's tightening their belts. Just the consensus is we don't want to have money out if values will drop. And again, if you have a good basis, deals are still getting done. We're still actively lending a lot of construction deals, but the price point has to make sense. So that end price point, if it's a for sale product, needs to make sense in today's market.
No, we talked about office.
Yeah.
Because nobody wants to do it. Are the other sectors, obviously you're pushing multifamily, which has been kind of the sweetheart with everything. And it has gone for a long, long time. I keep thinking, well, you know what, I own some rentals, homes, and the prices have gone up. I mean, if the tenant's moving out, I've got so many, to come in. There's a shortage, right? And
There's
some of that,
a fundamental housing shortage.
and so I think so it makes more sense to me. How are the other deals being valued, right? I mean, we're talking about cap rates and the spread there of what it is, obviously is it's harder to get any deal done across the board, right? But is it? I mean, how industrial, which is what I do mostly. I mean, how's that shaken out with?
So on industrial, if you're going to go build a new industrial building, having a good credit tenant lined up is the key. And so kind of across the board, underwriting has changed to where higher vacancy rate, where the underwriter's going to use a higher vacancy rate. So
Like what? What do you
maybe
think?
historically they're using a 3 or 5% vacancy rate. We're going to bump it to 10.
Okay. Yeah.
And then for your operating expense, so repairs, maintenance, management, all your OpEx. Maybe for a new building, historically, you got triple net lease. Historically, underwriting to 20%, whatever. Count on closer to 30, 35, maybe 40, depending on the location. And if you're in South Florida, maybe there's higher repairs and maintenance and different factors. And then we're underwriting. So if it's construction, we're underwriting to a higher takeout rate. So if today's market rate is, say, 6, we're going to add 100 basis points minimum to that underwriting takeout. And your pro forma NOI, we need to have sufficient debt service coverage ratio and debt yield to make the deal work. And so things have tightened up in terms of underwriting standards, and those are the kind of the key ones: the higher vacancy, higher OpEx, and higher exit rate.
Yeah.
Which kills deals.
It
kills a lot of deals.
Yeah, but we're talking. I mean, because there's. So here's my take on this. I'll say this and then get your feedback. Get in the business, 9%. Deal. I still, so on my app, on the Yahoo Finance app, which is what I'll use, I'll go in and I'll look at, okay, how much has changed in the last month, year to date, so far, 6 months, 5 year, and it goes out, how many years on, it's more than 30, I think, on the 10-year treasury for what it tracks on this one. For a long, long time, it's been 4.06 is the average. Mm-hmm. And it hasn't changed, right? So up, down, whatever. I've kind of wondered, that's weird, it's kind of gone up. But there's enough, right? It's moving like this on a daily, right? Or and it did come up, but it's 4.06, on that average. So in my head, right, this is me trying to just, hey, if it exceeds that, right, then we're kind of going on the other side. We're talking a 40-year average, right, of everything that's happened, ups and downs, and so that's the way I've looked at it, right? And it hasn't really gone above that, right? There was a point that it did above that. It's below that right now, right? And I'm just looking at it. It's just a gauge, right? It's a fuel gauge for me. It's not the whole market. It's just, okay, where are things at? So I look at that and I step back and I say, okay, I think we're in a good place right now, because now it actually makes sense, right? Because what didn't we have is no savings rate. If you say at the banks, right? And I've had this discussion with so many people, people don't really save anymore. There's really no return. It's not, so there's a mentality where we don't do that, right? As a nation, so I'm like, nah, I think they kind of had some of those old school ideas. They had a bank of cash, right, that they were sitting on. They went through the Depression, some of that, generation. My grandparents were that, and so everything was saving. They thought we were just frivolous about everything that
Just
we were
put
doing.
it all in the bank. Don't worry about it. Just put it in the bank.
Yeah. So that's not the way. That's not the most prudent way. There's lots of different things you can put it in. But the point is that whatever the rates are at, right? So they've come up, to me, I look at it and I say from a healthy standpoint, right? Because we went beyond healthy, right? We went so low to fix these little problems that now we've got this issue that's now come out as valuation issues, right? But we're talking maybe a quarter, like you're saying on some of this. It's a huge deal if you're. What was the value? Well, they financed it. The equity's gone. Beyond what we're talking about in some of this office, right? Anything that they brought in, I've been hearing stories about guys turning the keys back in, right, so to speak, to the bank.
It's better to hand over the keys now than later.
Yeah.
But think about it. If you go back to 2020, right when the pandemic was happening, we were, 12 years into a 10-year cycle?
Yeah.
And what happened? Money just flew into the market.
Crazy.
Government said, hey, it should have been a natural minor recession pullback. And instead, a bunch of money just was pushed into the market
Amazing amount of
from
money.
all angles.
PPP. And
Think about it. Think of how many people took PPP, the ERC credits, all this money that no one really needs. There's some people that need it, but the people who are taking the most,
big companies that were.
they don't need it.
Yeah.
You know what? It's as someone. So we were talking before the show.
Yeah, I know
someone
where you're
who
going.
hates paying taxes. I hate seeing money that goes to people that don't need it. So there's people that truly need it and they need it to get by. But there's people who are doing very well getting these funds that frankly do not need this money.
A lot of it.
Yeah.
I mean,
A
right,
lot
and
of
it was-
the majority. I would say the vast majority has gone to people that don't need it.
And it went out, and you would get all the. I mean, it went to every adult, right?
yeah.
I mean, the money at home as well. I
Yeah.
mean, that just, if you look at it and you see the infusion, it's just, so it's like I guess we broke every rule, right? Here we're sophisticated, very smart. I mean, like you start talking about the Fed and all these, it's like these economists get it wrong all the time, right? The economists. And
They use trailing data. The data they use is too old.
it's too old, and I think there's some fundamental things, that we're going to just keep going forever. Now, what I didn't hear anybody talking about, but I was told, I've been told that there were discussions of it happening is the reserve currency, right? But I mean, before just recently, I didn't hear a lot of people say, hey, we're not going to, we had this status, right, that helped the country, right? So there's all sorts of things have fallen apart fundamentally, I think. I don't know. Maybe this is not necessarily where I wanted to go with all this right now, but I guess have we broke too many rules to where? I mean, is there a concern with that in your end of the business, or you think if we just have valuation and corrections and things like that, the model's still there? It's not broken. We just really messed it up because, like you say, we're 12 years into the 10-year cycle of growth and great things, and then what would have been a natural. It's like what
Like a minor natural recession, pullback, ease things off for a year, 2 years. COVID happened. I don't think anyone could predict it.
Yeah.
COVID happening
Yeah.
and
No way.
all of that, and then all of the easy money coming into the market, and it created rampant inflation.
Yeah.
And it took, now it's 2023, and rates are where they are now, but it's a mess. It's a mess, and so it's always a little bit too late. Dollar short, day late, whatever the saying is basically where we're at. And I hear from I guess on social media, I always see like realtors pushing, oh, buy a house today, rates will go back down to 2%, refinance then.
Yes.
And I'm like, historically, rates are average of what, 5-7%. I think if you smooth out like the historical and take into account for events like COVID and other crisis, your historical rate's closer to 5 or 7%, which is a normal rate. It's a healthy rate. You don't have the inflation issues. And so I see people pushing, just buy a house now and then refinance it later. But if you can't afford a house now at today's rates, don't buy a house.
Yeah. So before we got on here as well, I've talked about Milton Friedman.
Yeah.
He had that show in the 80s, and he was kind of the go-to guy. And it's interesting because at the end of each one of his shows, and they've got them all on YouTube now. That's where I've been watching. And it says he's sitting there, and there were the different economists that were disagreeing with him on some of the things, because he's just a pure free market. It will find its, he believes in it like 100%. Like there's nothing else there, which is kind of refreshing to hear somebody just talk that way, right? And these other people are arguing with him about it, and it's concepts and things like that, right? At the end of the day, but it's kind of like what you're talking about. It's like he made this case, and I love men that have done amazing things, like Henry Ford. I've read a lot of biographies on people, and it just intrigues me the way their minds think. Most of them are crazy, a little bit crazy, and they're just they have certain ideas about the way things should be in community, right, and the world. But there were many years where the Model T went down in price, right? The idea that he had to have inflation or that the price was going to keep raising, right? This is an interesting thing I've thought a lot about. Why does it have to? Why do prices have to go up? I mean, there's certain segments where we hear it doesn't have to go up. I mean, there could be more. You know what I mean? We almost create a problem, right? If it's inflation, if supply was really driving it alone, right? But he got to where he was going to make a spread, right? So if they became really efficient in doing this, it was just a different time and era. People, no, we've done it with computers. They say, the power of what is the computer, what we're paying today from what you would have, is just like, it's a fraction, right?
Yeah.
And that's probably true. And so, I mean, I hear this, but it's an interesting thing because, I don't know. I mean, like I said, I mean, we're getting to no man's land, but fundamentals, like you say, no, hold off buying the house, or you know what, prices got to come down. The sellers can't keep, there's this expectation that it's going to go, things are going to go back up. So I've heard the same thing you've said.
Drives me crazy.
The prices are going to keep going up. We got the demand. It's like, well, why do they have to?
Well, there's a fundamental housing shortage. Yeah. Everyone should have the ability to buy a house. The issue is incomes are staying stagnant. Yeah. If inflation is 5%, 10%, and you get an annual 2% pay raise, you just lost 3 to 8% of your income. And well, here's the thing about inflation. I don't think people realize if we have if we have inflation for one calendar quarter, say it was 6% inflation, and then the next quarter is 5% inflation, that means the price has risen from that 6%, another 5%, and prices don't come back down. You have to have negative inflation. You have to have a negative number for prices to come down. And so if you look at the price of your basics, like look at the price of milk. Yeah. It was $1.99 pre-COVID. You go to the store, it's $3 or $4 a gallon. Maybe the price won't increase as rapidly. Will we get milk back to $1.99? It should be a commodity. It should be easily accessible. Probably not. And who are the people who does it affect the most? Not guys like you and me. It's the people who are already struggling. And so it's difficult because you're talking about the free hand of the market. And if you look back to 08, 09 and all of the bailouts, if there weren't bailouts, we would be, probably just recovering from the financial crisis and probably would have thrown us into a major depression. But it's always the small guy who takes it on the chin, and it's unfortunate, right? And
yeah, it's very interesting.
Yeah,
it is, because I mean, there's, and so a lot of the things I've been saying on this podcast too is like, hey, there's very little we can control, right? Mm-hmm. But you got to be smart, and so there's very little we can control. So at the end, are you going to get up and go to work, whether that's in your house, or are you going to be creative? Are you going to come at it at a little different angle that you can make something better?
You can't be complacent. Yeah, that's the thing. You can't be complacent.
Can't be and where a lot of people, like, they talk doomsday, and it's like, hey, we're still making deals. Here's what it takes to make the deal.
Right? Doomsday means you can make a lot of money coming up. Doomsday means you have a huge opportunity to kill it. Yeah.
So I mean, this is a big discussion about what we've had, everything up to this point, but that really is, my mentor used to say that every dip or things like that, he said he'd watch people leave the business, right? And that was from the financing side.
That's when you invest in.
And he's like, why? So why is this money sitting on the sideline? Because there's a lot of people that know this. This is when dynasties actually could change, right? I mean, this is when somebody that has quite a bit of money, right? But it's at every level, right? I mean, if you've got a little bit and you can do and go, and sometimes just on the service side, right? I mean, there's opportunity just by staying in and crafting some of these things. There's huge money to be made, right? And especially, I remember I was having to get the continuing education.
Yeah.
And so it was easier because they didn't have everything on video yet or conferencing, but it was like right there. This is actually, so it was back in, I was probably like in around 2012, right? So it was 2012 actually is when I was doing this. I drove up to a place in Salt Lake so I could like knock a bunch of it out there. And anyway, everybody else in there was talking. It was a pretty full class, pretty low key for the most part. They were just talking about the market, and things were starting to kind of recover, but it wasn't great. But they were talking about in 08, 09, how many licensed real estate agents there were, and they went through the mortgage and the appraisal. Well, I mean, it was like it was less than half of the agents, right? Just by weight. I mean, it's just a comparison, right? It's not, what does it mean exactly? I don't know for sure, other than it wasn't easy picking, right? Because, but at the same time, it's like, wow, that's really interesting that was the perception, right? Because it was, easy picking because they could sell a thing or two, because a lot of them obviously had other jobs, maybe. They just got their license. But the one that was really interesting to me was the appraisers, because it did take a certain amount of skill or market knowledge and a process that people had to rely on, right? Not an agent trying to put the deal together. What's the basis? Look at all these things critically, right? Well, a lot of the guys did get out. They weren't, I remember when things started to ramp back up, it would take a long time to get an appraisal done just because there wasn't enough appraisers, right? So a very interesting thing, you like that. Well, whenever I see something like that, where is the opportunities? Not just to get your appraisal license necessarily, right? That's
Right.
For one person, that's it. But what is going on? What are the things that are happening behind where the huge money is going to be made, right? Well, valuations. I mean, that's why I kept buying a couple of those rentals. I'm like, so I moved down to Spanish Fork, and I saw some things coming up for sale. I'm like, that's like 60,000 less than it is in North County. Now there is a price difference between North Lehigh
Look
and
at all the growth, everyone's pushing south, right?
it's pushing south. There's the
yeah.
open land. There's great development. There's big projects that are going on down there. And I'm just sitting there, it's like, okay, I'm pushing a little bit, for my extra.
Yeah.
But I jumped a little bit, right? Because it's like, there's no way. These are historically low prices, I thought. They still were. It was lagging. South County was lagging North County quite a bit. Anyway, they were great investments at the time.
Oh, yeah.
But I could see it, and it was like, okay, I got to stretch a little bit to make this happen. I wish I was in a better position. I wish I would have not got divorced in between there, and nobody wins in that scenario. They say
Right.
The loss in. I look at it, it's like, my wife got the better. My ex-wife got the better. But now we've always been pretty good friends at the end of it. So we can joke about it a little bit if she sees this. But at the end of the day, it's like she won, no doubt. She had the better attorney on that. But none of us really. We took what we had, and it's weird how that kind of got broken up there. So that's a whole separate issue and a whole different podcast. But what do you see going forward? Where are you at from the standpoint of family, life, time? Sounds like you got what you view as a lot better, without the challenges of the market, but a better job, a better connection network of people that you've got right now.
So I would say money is always available for the right deal. And there's a lot of groups. One of our specialties, one of our niches, we do a lot of special situation lending or distressed lending. And that's always a higher yield product. Even in a good market, it's a higher yield product. And so, for example, right now we're seeing a lot of oil and gas deals.
Oh yeah.
Because of ESG, a lot of banks can't have exposure to oil and gas.
Crazy. Very interesting.
Well, guess what? The price of oil is still up. There's still demand. I know everything's pushing towards electric, and that's awesome.
I don't know about
Whatever.
that. Whatever. I'm mixed on that a bit.
Yeah.
But yes.
Yeah.
But there's huge opportunities.
Whatever. It creates opportunity, right?
Yeah.
So you have these oil and gas companies looking to go buy an oil field and expand their operations, and they call up the bank they've been working with for, their whole careers, and like, hey, sorry, Justin, we can only have so many oil and gas deals on our books now, even though this is like a no-brainer. And then they call the next bank and they're like, sorry. And it creates, now they get, they're used to bank money. Now they come to high yield private money, and there's a little bit of initial sticker shock when you're paying 14% interest, but now it's okay. Wait, this is the deal. This deal's awesome. You're cash flowing, very low LTV basis. You great global cash flow. So we're seeing a lot of deals like that are that make a lot of sense.
Yeah, you made that comment in your presentation.
Yeah.
And I thought, that's interesting, because I've had some friends and family that have been in some of that oil and gas, and I thought, yeah, I mean, that's, I don't see it going away as fast either. I think some new technology is going to come that even where we think the electric and that is going to just, that's just, my sense on it is that's what's going to happen, but I don't think we're ever going to replace that. I just don't, maybe a different uses that we've got, but it's such a great, energy, proven energy, right? I mean, it's very reliable of what you can and can't do with it.
All I know is it's past my pay grade.
Yeah.
And I know oil and gas, for now, there's still demand.
Yeah.
We can get these deals done.
That's awesome.
Make a good fair amount of money. And I guess the gas electric argument, I'm a big car guy, and if you've gone and if you've driven a Model S Plaid or Plaid, whatever it's called, super fast.
Yeah.
But it's like a one trick pony. Go get behind the seats of a Ferrari. I just not to go on a tangent, but one of my
this is what it's about right
one
now.
of my one of our clients, he's a big Ferrari enthusiast. He lives in the Bay Area, and he invited myself and one of my business partners to come to a Ferrari event.
Yeah.
So we got behind the wheel of a 296 GTB. It's a hybrid with a internal combustion engine. It has like 900 horsepower combined. The driving experience, the engine roaring behind you, like it's something else, right? Like
Yeah.
I love that visceral feeling which you don't have with the electric cars, which are awesome, way fun, one trick ponies. But I love that visceral fun experience, which you can't get right now.
Very cool. I mean, actually, so I've got a client, and he's gone out to I think they call it the Prim. It's out there. It's dirt racing, right in Nevada, and he goes out every year. But I mean, they'll go out throughout the year, right? There's a certain track that they haven't really changed, and so they'll go. His son's kind of coming of age, so they got, instead of going with the high-powered, these amazing, I don't know what you call them, desert trucks, that they've got.
Like the Baja Racers.
Yeah.
And
There's that category. Then there's all sorts, down to like buggies, right?
Yeah.
And so they modified a VW Bug, right? And that's what his son was going to ride. And he was just telling me how they went through all these things. It's air cooled, right? I mean, it's air cooled. So it's like, anyway, all this stuff that he was planning, right, for this event, right? And it was because they're racing against other bugs, right? And he was talking, they make so many laps, and do you change drivers, and did you blow a tire? I mean, all these problems that can happen out there, right? And he loved that it was so, they just went simple, right? On this, okay, what do we got? Anyway, this just happened. And so I've talked to him several times about it, and it was so much fun, for him to do that. Of course, how that fits into what we're talking about. But it was so they got the old engines that fit in there. I had friends that always were working on I've never been like an engine guy, like actually be able to do it, right?
Me either.
I just, when I get in there, it's like
I just want to get in there and drive and
will
experience
you make
it.
that and let me go, because I love that part of it, right? I love, and the dirt, there's something about being out there and jumping and doing things you can't do on the road, though that's fun. But it's very interesting because that's not going away, right? That it's only gotten bigger since he said he's been going out there for the last, I don't know, dozen years or whatever it's been. And he used to do this little like short track, where they've got some really bad wipeouts that I've seen. It's like, I didn't realize it until I saw, like, he showed me some of the videos. I'm like, dude, it's like, I mean, you could get snap a neck, right?
Yeah,
I mean,
it's
those
dangerous.
guys, it's dangerous, right? But they actually make it so you don't turn the steering wheel in on those. You actually have to like pull it out, right? So they gear it so you're like going in a circle. But I mean, they're going all out, 100% as what they can go, with the limits, because that's the other fun part. They said is that it had to be stock at a certain level. Like you couldn't
the
go
parameters you have to play in. But to answer your question of what I see in the market, one, I see a lot of opportunity coming up. I think there's a lot of different angles, like you were talking about, to make money in this next cycle.
Well, when do you see that happening? When do you see this it turn into where people understand where the rates are at and the value? You think it's going to happen pretty fast? Like it sounds like for office, it's kind of there. It's happening.
Yeah.
Right? But when does it hit and turn? I don't know.
So there's about $1.5 trillion of commercial mortgage debt that is maturing in the next 12 to 18 months.
Yeah.
And I don't have the exact numbers on this, but it's roughly, I think it's about roughly $1 trillion of that 1.5 no longer cash flows at today's rents or today's interest rates.
Yep.
And so what do? Do you go raise rents? Well, you can't really raise rents because people can't afford it. And that's across pretty much every sector. There are some strong spots. I would say industrial is still strong. Those deals, kind of the good side, but multifamily, all the new acquisitions, remodels from 2-3 years ago, they're now coming due that are not hitting the pro forma numbers because rates have gone up. And so you have a lot of people calling for rates to come down. I don't think we'll see rates come down. I think we'll see rates.
I hope not, to some degree.
Yeah, I hope not. I think we'll see another rate increase based off the latest FOMC meeting. The notes, they mentioned, hey, we might pause one time and then raise rates again, then pause and reassess. Or they might raise it up another 25 bips and then pause and reassess.
Yeah.
But that's what I don't get, because the Fed has been very transparent, in my opinion, of, hey, we're going to be raising rates, and then the next week I'll see a spin saying, oh, hey, yeah, no rate, Fed's going to decrease rates. Everyone get ready to refi. And I'm like, are we reading the same notes, or did you watch the same meeting? Did you?
We think a lot of the same. It's like, and why break the fundamental? If we have inflation, that's going up, that is the only thing that we've got, right? Because the government, on the rest of it, the fiscal right side, they've been throwing money at everything, and it doesn't. Well, I think we're finally realizing. Obviously, I think it takes time sometimes, right? But sometimes you pass some laws that just end up right. But from the monetary side, right? I mean, this is what they have to control that, right? The money supply, and so if you can't have inflation that's going to keep going. So
you can't have the stagflation. It's
no good. So we've got to do what we've got to do. Mm-hmm. That's the way I look at it, right?
Right.
No matter how painful it is, let's stop breaking the rules, which is what I felt like we've kind of been doing, because we've had some rule breaker things, right?
Yes.
Pandemic and some of these other things that have happened. So it's like, and world
everyone gets money when they shouldn't. Not everyone should be getting money. Maybe the people that need money, that truly need it, should be getting money so they can survive. But we shouldn't be getting checks. We shouldn't have gotten those pandemic checks, right? I'm like, why am I getting this? This is not making sense. But you're right. There's been a lot of rules broken.
Yeah, I feel like that.
If you look, I think the other core issue that has to be addressed is spending. If you go to the treasury.gov website, you can see the U.S. budget, and where the money goes, the expenses.
Yeah.
And so I think it was either 12 or 15% of all income, all the U.S. Treasury income is spent right now on paying the interest on our debt, on the U.S. debt. And so they just passed the debt ceiling bill. So I think it's 2 years. I think it was 2 years of no ceiling and then reassess. But there has to be some kind of change somewhere, because we're kicking the can down the road 2 years. And so it's a very careful balance between cutting essential programs that people need and balancing the budget, taxing people that should be paying their fair share. I think there's a lot of solutions, but you got far left, far right, and no one wants to meet in the middle.
A lot of divide.
Yeah, a lot of divide.
Another interesting thing I've heard about, I'd like your input on this. A couple things. One, I was going to ask you about some foreign money. I've heard investments with United Arab Emirates. There's some people that have had, I don't know where it's coming. I've heard that, Vietnam, South Korea.
Like EB-5 money or from the government, like those respective governments?
No, it's investor.
Okay.
Yeah. You know what? I shouldn't say that 100%. Maybe I misunderstood that a little bit, but and it goes back to value, right? And where there's opportunity, right? Whenever I see money that's outside of the thing, it's like there's money there, but people are holding it, right? Because they don't want to just throw it, right? So there's very few people, hopefully, that will do that, right? Or maybe they get caught, or they don't analyze it properly, right? That's why money would go into something at this point. There's just too much that, yeah, okay, no, we can do it if more money's in, that type of stuff, right? So that, and then also, which is interesting, because, and I've heard the gold, you know, I've been watching old guys sell
like
gold
the gold
on
standard
TV.
and
Yeah, bringing some of those things back, which is interesting because I actually had a guy, he's a fellow agent. He's been doing it about as long as I have, but he's an older guy, and he had bought some of these gold. It was almost like supposedly there's 24 karat gold or something in this thing, and he was saying, hey, I bought this and it's tied right, and it was like 1/200th of a ounce price, right? So that's what he had paid, and it is whatever that is. So it's not, you know, but it was the interesting thing is it was a $5 Utah. But Utah was the first, what he told me, I haven't researched this. Utah was one of the first to implement that, to where it was actually backed by the state, right? This gold
there's
standard again.
the gold standard, the reserves.
The reserve that was there, so based on, and why it had to be limited to the state, I don't necessarily know. But what he said is, he started naming all these different states that had implemented that. Ours came in 2011 or something in the state of Utah, and then these other states, and there's several that are coming on, which is interesting to me, right? Because it doesn't necessarily, I mean, it makes sense to me, right? If I step back from it, it's like, okay, well, you just bought interest in gold, right? I mean, that's, you know, I try to always take it down to the base. It's like, there's all this talk about what's going to happen in like red states, blue states, and all this difference. And like, okay, you bought so is it really backed by gold? Is it, you know what I mean? There's a couple of things that I wonder. It's like,
sounds like he just wasted some money.
I don't know, but it's a very interesting thing. So, and I've not heard people, like I said, people have been selling gold, and it's like the old retired actor. It's like, hey, I've always put mine in.
It's 1:00 in the morning. It's the
Exactly,
infomercial, like,
exactly.
hey, buy
So
a
I
gold
thought,
coin.
Well, I don't know. Well, they're selling that's more than the ounce price, you know, because it's a die cast thing. It's limited edition or something.
Limited edition, memorial coin, whatever.
So I saw it for what it was, I think, on that. Now it's a little different. There's a different angle on it. So anyway, any input you've got there?
Yeah, I think you go back to the basics, right? Back to the fundamental, like just taking a step back and think from like a utilitarian standpoint. Back in the day, it was great to use gold, silver coins to trade, and that was a acceptable currency. I don't see anyone looking around gold to in my mind, it doesn't make a lot of sense. If the current dollar went away and we reverted back to how things were, yeah, maybe lugging around some gold and trading with gold coins, but I don't see that happening. But and I'm just I'm pulling on some muscle memory here. If you look at why we went away from the gold standard, there's a lot of arbitrage that was happening, right? Because they were pegging the U.S. dollar to the price of gold, right? And there's arbitrage, and so it's like, okay, you can't have you have to have parity with the value, and so I would let an economist do a better job answering that question, but I don't see. I think it goes back. I think it goes back to spending's out of control.
Yeah,
we got it. And I was ranting a little bit prior to the show to the show here that there should be some common sense adjustments, but common sense isn't that so common because everyone is so divided. I'm right, you're wrong, but actually we have some good ideas and we should meet in the middle. And I was telling you I have inflammatory bowel disease. I have ulcerative colitis, and part of my treatment, I have to get an infusion every 8 weeks, and the total cost they bill is about $20,000, which is stupid. I can go down to Mexico, get the same medication, full works, $50. I can go to Canada, get it $400. I can go to the EU because they have a fixed price. I think in the EU it's about it's about $500 per infusion. And so should everyone have healthcare? Yes. Should we all be paying for it? Should prices be a reasonable amount and not being taken advantage of? Yes.
Yeah, for sure.
And I was ranting about the balance billing because I got a medical bill not too long ago because I also get very severe migraines. I had to go into the ER, and the hospital and doctor are both in network, but the time of day I saw the doctor, not in network. So I got balance billed the difference, and I had to fight it forever with the insurance company and the hospital. I had to do a little meeting between everyone, and it took a lot of time and energy, but it's a very common thing, and this should not be happening in America, right? This is the greatest country on earth.
Yeah, exactly.
And let's figure things out. It's not let's put our political beliefs aside and say, okay, well, yeah, going to the hospital shouldn't bankrupt a family. It shouldn't cost, $4 for a gallon of milk. But on the same hand, it shouldn't be nationalized. It shouldn't, because then you lose the quality, right? It's not the same
quality, and I think sometimes you get what is it when they get the medication? They get the
like the generic or like
the patent on it to where they
Yeah.
can run it, and they've got these rights, and they're artificially keeping something high, right? And they're limiting somebody coming in, almost even try to get close or something like that, and so we've got a lot of things. I think that if generally there's always a reason, right? And it seemed like a good reason at the time to do that. Now we're going into the pandemic. So it was just like, let's throw money at everything and keep people afloat, right?
let's just throw money at it and it'll all work out somehow.
So as it was happening, if you would have sat down and asked anybody, really, just common sense stuff, no an economist, nobody in the finance, like the average person. I mean, I heard a lot of old guys that were like, what the hell do they think they're doing? I mean, you can't just throw money at a problem like this and
doesn't work.
Hey, we got to have ups and downs. That's why you save a little bit. You got these things, right? It's, so
you have to have a rainy day.
You got to have a rainy day. You got to. Electric cars run out of battery, right? I mean, you got to don't take a 500-mile trip that you only got 300, right? I mean, these things that are almost kind of like it's we're out of a little bit, right? I mean, we have so many great things that we're kind of out of touch. They talk a lot about where the food comes from off the farm. Like, people don't really understand how it's made, right? Or how animals have to be. So they want to protect the animals, but they love the ribeye, right? Whatever. I mean, there's just a disconnect at a lot of different levels. What a great time to be alive in a lot of ways, right? I mean, people can bitch and say they don't know, these kids don't know anything. I'm like, we just need to understand it better, right? And like you say, bring the people together. I think a lot of these we've proven over and over in America that if you do bring people together and everybody can be reasonable with each other, we can solve some huge problems.
We just need a common enemy to unite us, right?
That is what's always been able to really help us achieve, right? So sometimes I think we've come up with a fake common enemy. It's like, this is the problem.
Artificially create this enemy to let's join back up to go fight this common enemy.
And there's got to
right?
be something there, right? I mean, because we've got a lot at risk right now, I think, out there. And I think that's kind of what started this whole thing, right? Is I felt like I hated hearing all the divide.
Yeah.
I mean, what really, so
well,
I was going to do
views.
this for
it gets views, right? Getting the divide
hate,
and go screaming and yelling.
And they got the algorithm, right?
Yeah.
I mean, you could be going through all this stuff and you think that everybody in the world has your same view, right? Because you're liking and starring this thing.
You're getting all of it back.
and it keeps, I mean, I am amazed. I do not want to check out with that, but I'll catch myself. And it'll be 25 minutes later, and I've been scrolling, looking, forward it to a friend. That's not who I am. I mean, really, that's not the way I normally, to get me to, I love sports, but because they had commercials, I'd check out, right? I'd go do something else in between, thinking I'm going to come back and watch the game or go to the bathroom, and it hadn't started yet. I'm done. I mean, like, so to sit there and focus on this thing that keeps me planted in my chair, to not go out, I'd just rather go outside and do something, even like go weed or something, in my yard, kind of get that mental, physical, and everything combined. But it's amazing. I mean, so we've got all these things, to watch them discuss these things in front of a committee in Congress of how they were, Facebook knew that they were, Instagram knew that they were getting these people addicted to all these.
Isn't it crazy?
It's very interesting things. We got to come up with some interesting. So that's what started, right? I was trying to do social media, and it's like, you know what, there's so many things to talk about. I don't know where it's going to go. We've got to talk to people, right, about this and just get some different views out there. And I've had a couple things go viral, right? And I'm like, wow, of all the things that go viral, right? And a lot of it's just down home, like anything you would have said, though, right? We snipped it up. It's something like that. And we'll have those in here. You're going to say something that's just going to resonate with millions of people out there, right? And they're going to like and share and say, amen, brother. You know what I mean? Like, you know, like as if you just gave you're a pastor that gave the right, you know, it's like we're all behind you. Yes, you know, right? It's kind of weird to watch that happen. One of them that was a little interesting is I just did a recreation. It was a very snippet of Twitter. Some of those people were posting their things. Here's what you do at Twitter, right? You know,
Yeah.
And they basically spent 8 hours in the office. They did nothing, right? It was like we went down to the breakfast bar, we got this, and you know they did, and they added the new wine tap, and so we went there, and we went to the roof, and they talked about calling their friends, but nothing. So they might have done work.
I think I saw that. So it's funny you bring that up because I think I saw that same thing on Twitter. So the other thing I'll say, which is kind of off topic again, but I listen, I make a lot of mistakes. Yeah. I'm wrong a lot.
Sure.
And what kills me is in my mind, as you have different life experiences, as you talk to other people, because my life experience is different than yours, and if you grew up in a different town and had different life experience, you're going to have a different viewpoint on things, right? So we could have different viewpoints, we could have different life experiences, and my way is not always going to be the right way. There could be a better way, right?
Yeah, for sure.
But the challenge is, in today's world, it seems like, hey, if you disagree with me, you're an idiot. Like, there's my way or the highway. But, you know, my thought process could be way off. But we see it throughout politics, a lot of thought leaders, just, it's my way or the highway. And if you don't agree with me, you're an idiot. And that's that, where, well, you know, Justin had a different life experience, different viewpoint. Actually, we're both right, or he has a better angle on things than I do, and people have a hard time.
It's really interesting.
It's hard to be wrong.
I was, I think it was the year I graduated. In that time frame, is when the wall came down, the Iron Curtain, right, and that was symbolized that the way that we did everything in America, and the capitalist, and then the constitutional republic of running things, was superior in every facet, right? I mean, and that was wrong at every level, right? It was going to implode because we had propaganda. The first one of the elementary schools was built, you know, post World War II, and they had the fallout shelter in the basement, right? And everybody's heard of it. Like, really, you went to one of those? I'm like, yeah. And they actually, they didn't want us to ever go down there, right? I mean, even when they did the drills, they'd still have us go outside like there was a fire. Right? And it was like, why can't we? I want to go down there. It's like, why can't we go down there?
Let's go check it out.
And they're like, we're not going to get the kids down there and that thing, you know. It was basically, I mean, I don't even know what it was. Is it actually going to protect us from fallout? I mean, we were underground. We were still going to have to breathe. Did they even have the ventilation systems?
Yeah. Do you have any food or water down there? What's, you know, you last a couple 36 hours of hell, then you die. And
look at all the crazy people. There's somebody that had a propaganda behind that was making money and building those schools with the fallout shelter. I mean, you know, it's like, hey, we got to do this.
It's a profit center. You got to have the shelters for the kids. Otherwise, when they nuke you, you're not going to have anywhere to go.
So all that propaganda stuff. But what's weird is now, so all the stuff's come in, and 1984, George Orwell. So there's like this thing that just like we were indoctrinated with. I mean, one of the other things is that we didn't believe that Russian women were beautiful. We thought they were all 6'4", like Helga, and you kick your ass.
As a married man, I have no idea what you're talking about.
You're a smarter man than me, okay?
What are you talking about, Justin?
When I saw that when these women like, she's Russian, you know what I mean? Honestly, that's how the propaganda worked so well. It's like they're the most beautiful women on the planet, you know, whatever. It's like, you know, but their women were just as beautiful, right? I mean, that was the point. Was that we're not that different. Then I think I told you the Russian. Did I tell you? I had a neighbor that was a Russian guy.
Okay.
I've talked about him for whatever reason today. It was somebody else I was talking to, but it was he loves his kids. He loves his wife, and the fidelity there and everything else. It couldn't have been any different, right? Now, to this day, I look at some Russian people. I don't know if it's the way that they talk on their cell phone, but it's like he could be just talking in Russian, and could be like, "Hey, I love you very much." Shut the phone, because they always have flip phones too.
Yeah. And the tracksuits.
It's like somebody just got the hit. Somebody's getting taken out. You know what I mean?
Something's going down right now.
Something bad is going to go down.
Yeah.
Because that way we're trained, which is really interesting because you say that, right? Maybe not, and I do believe this, absolutely 100%. If you do talk to somebody, no matter how different it is, it really does boil down. They want to just protect their family and the people that they love and their way. They don't want any more taken away from us, right? Them or whatever it is. So the end result really is the same. It's just how do you get there?
How do you
right?
get
and
there?
then there's these crazy places, and I do find myself with the answer, and all I'm doing is regurgitating some things that I've been told for years. It's a very interesting thing because anybody that's known me for a period, it's like I always used to say, hey, I don't know the right way to go, but if the masses are going that way, then I know that that's not the right way.
That's not the
Even
right
as a
way to
little
go,
kid,
yeah.
it's like, that is the wrong way to go. It's like my parents would be like, what the hell is, you know what I mean? They're doing a good thing there. But I mean, I had that in me, right? So, but yet I see myself getting in line to go that way in lots of things, which is just interesting, right? It was like, but we have so much calamity and issues that are there. But I think that, and I hate when they start, I've heard people comparing to Rome. We've got to have this fall, like it's inevitable. It's going to happen, right? That we're going to run amok in society and we're going to crash and it's all going to, be for naught, and whatever,
Yeah.
But there is a lot of discussion there. Maybe I'm talking to different people, than you are.
I've heard that. I've heard that before.
And so there's this inevitable thing that we're on a crash course. We can't fix it, whatever. And I think that the more we do get back to, right? You came in today because you're an expert in financing these loans. And really the discussion, if you get down to it, like, hey, the money's going to sit on the sideline until the values are down. And or people
Exactly.
bring more money in, right? That's as about as basic as you can get, right? Is that fall in the invisible hand? Well, no, it's the guys with the money aren't going to let that happen. And they got people like you that are on the ground that are bringing everybody together, right? Why bring? It gets down to. I guess what I'm saying is, as sophisticated as it sometimes seems, it really is some of the bare.
It's the basics, right?
The basics as
Yeah.
far as you can get. That if you can strip off all the layers of how or why or this perception of these people with the money, and the people trying to just make it, and it really does come down to the very basics, which is what we're trying to make happen, right? And I think it's really important. We got to do that because I don't, they say as you get older, that wisdom comes. I don't have as much of a, this is the way it is, right? I've lost that, and now I've got this grandson that's living with me, and I've got some other grandkids. I'm like, I think they're smarter than I was as a kid. They're more gifted. There's something there. Maybe I hit my head too many times as a little kid. But at the end of the day, I'm like, I don't want them to be in this crazy thing, right? So hopefully that wisdom will prevail, and that they can still come up in a world that they can go into finance and have these opportunities of what are proven mechanisms to keep an economy going and not get overbuilt, and but there's always going to be a check and balance there, right? So that's what we're going through right now.
Exactly.
And it's crazy that people are saying we got to have interest rates down to the point that it's like no,
Let's
let's
just keep the
leave.
party going forever and never end the party, right? Let's
Yeah.
just keep the lights. Let's just keep the lights down and just
Just go.
keep the money flowing and don't worry about it.
Yeah.
We'll kick the can down the road a little bit longer and
You said you're 30.
I'm 30.
Which
Yeah.
see, that was crazy. I mean, he's got a little gray. If you can't see that in the camera, he's
too
got
much
some
stress.
The industry he's in would definitely do that. I couldn't do the financing side of it. I really, with all the things, the dynamics of it, and all the analytics of it all, and some of that. But it's just perfect for what I'm doing. I fit there. But I'm 23 years older than you. You know what I mean? That's crazy. Sometimes I think that's like, okay, I am now getting. I better have a little more wisdom because I'm progressing that age-wise no matter what. So at the end of the day, it's kind of interesting.